Listen, play politics in your favor. No matter what side you're on. I mean, everyone's going to have their bias of what they believe in and stuff like that. And the media's going to force you to hate the other side like they always do, no matter what. That's why they push a boy's a girl, a girl's a boy right now, right? It's got to be so extreme that it's crazy where you separate people, right? That's what they want. But use it to your advantage as an investor. I mean, are you pissed that they're depleting the strategic oil reserve right now? I don't know. I mean, it's at its lowest level since 1984. Again, that was created a long time ago. I don't know how much oil we need in that, but it is being used for purpose to lower prices, but not because they care about consumers. It's because they want to get elected and they want more power. So in the meantime, while they're doing that, and you're seeing, oil stocks did pull back a little bit. They're still up for the year. They were up a lot more. They pulled back, but oil prices are probably going to go a lot higher from here if you have a 12-month outlook. I don't know where they're going to go immediately, but you have OPEC is supporting, cuts. We're going to be cutting production here, right? It's because we're not going to take any more oil from the streets of dirt. That's going to stop right after November. We all know that. So, it's going to force oil prices to go higher, gasoline prices to go higher. And take a look at that, because it was something interesting that I saw today, Daniel, which from Exxon, and I'm probably going to mess this up, but I saw the first line and I was surprised about a charge that they were taking. I wanted to bring this up, and let me see if I can. So it's probably going to take a minute or two, but I want to go to the briefing. But
yeah, they announced a charge. Probably, I'll take a guess. It's around derivatives and different liquids and things, but they also are going to get a bump somewhere else. So I think it was a net positive.
Here it is. So they disclosed. So I saw the first part of this, and this is earlier today. So Exxon disclosed a 1.4 to 1.8 billion negative Q3 impact from change in liquid prices. Right. So liquids, just natural gas liquids, that could be whatever, from kerosene, from, just like refined products. It's not necessarily, natural gas, which natural gas prices are higher. They did pull back a little bit. So, but they disclosed a 1.8 billion to 2.2 billion positive Q3 impact from a change in gas prices, right? So gas prices were a big deal, the natural gas prices. What's the point of this? Exxon is a full service, upstream, downstream. They do everything, right? So you could get companies that are leveraged more than natural gas right now, and natural gas prices, I mean, they're projecting natural gas prices to fall, the futures are like 50% from here over next year and the year after. I mean, I don't see that happening at all. I can't see that happening, especially with Europe and everything going on there. And where prices are in Europe is incredible, to the point where now we have all these LNG facilities that we could, export. And just for the record, guys, when I was researching LNG companies and Cheniere Energy, these were supposed to be import companies, not export companies. They were supposed to be made to import natural gas. And then once we found shale technology and how much natural gas we had, which I remember Apache CEO, and this is about 2011, 2012, I went to a conference and he goes, we have more natural gas than we know what to do with. He goes, and it's true, because that's why they were burning it for free, right? Because it's a byproduct of oil. They'll burn it for free. So we have tons of natural gas here, and the whole entire world needs it. And man, prices are skyrocketing. So instead of just saying, I want an oil company, well, oil prices hold up, but there's also companies that really specialize in natural gas liquids that go into, just so many other products and chemical products and things. But if you can get a pure play on natural gas, and that's, the whatever, the Apaches, the Chesapeake, I mean, that's where you could really see prices, skyrocket, especially as, gasoline prices are going to go a lot higher. But it's not only oil companies, and yes, again, you have all these byproducts, and they could break it down, and they actually create a system where they'll take the liquids, natural gas liquids, hopefully I'm not getting complicated here, and they'll take the oil price and natural gas price and combine it and say this is how many barrels of oil is the equivalent, right? Barrel of oil is equivalent. But there's a big difference between those three markets, as you could see. I mean, you don't see it often when ExxonMobil, it's a $1.5 billion negative from the change in liquid prices. That's natural gas liquids. But yet you're looking at a $2 billion positive. And this is just one quarter, Q3. This is just one quarter. Those are big numbers, but you could really dig down, and this is what we do. It's not just, hey, buy Exxon, buy Chevron. Yeah, but you know what? There's companies inside this industry that are going to specialize, whatever, if they're more of a natural gas play or more growth into one particular industry inside of oil. Instead of getting a 30% pop, you're going to get a 200% pop. And that's why it's important to really do the research behind this. It's not just, oil's going higher. Well, natural gas prices are probably going to go a lot higher than that. So it is interesting. I know there's a trend that you've been on a long time. You've actually had recommendations for us, Daniel, in the oil sector that have done very, very well. So, and I know you're still bullish on this sector. Where do you think oil's going now?
Yeah, Exxon's doing good in Dollar Stock Club. I did stop out of VNOM. The timing couldn't have been worse on that, so I'm sorry about that. That sucks.
Yeah, it's a lot higher now, right?
One last, my final thought. I'm terrible at price targets. I just think it's going to I just think oil is going to be above $80 a barrel for a long time, and I think it's going to be in the hundreds, triple digits. I want to say one final thought. Imagine being ExxonMobil and everybody in oil or energy, and you're going to have amazing results again. Your previous quarter was awesome. Yes, oil prices are down 30% from their peak. You're not ExxonMobil. You don't put out releases like this and start warning of another positive quarter without being nervous. And you only do that because of politics. Expect them to be brought in front of a committee again soon, railed against, but all this is going to be this is just front running the show of, hey, when we announce, and you have briefing up, I don't know when Exxon reports their next earnings, but they're probably going to be really, really damn good, and that's why you get out in front of it. Imagine being so good at something and creating so much money for you and your shareholders that you have to be nervous about the government entity over you. That's where we are in the energy sector.
Yeah, it's about 3 weeks from now, so October 28th earnings. Okay. This earnings season is going to be crazy, but I could picture the oil company.
Yeah, and oil's down, but they're still going to be doing great. Yeah, and maybe I'm wrong, so we'll see this, but you don't get out in front of this unless you know you're going to have good results.
Yeah, I mean, all the shit with the Fed, too. I know you're seeing, depressionary conditions everywhere, and usually oil prices go down, but you are going to see China come out pretty much in a week or two right before the election and say, we're no longer going to have a zero COVID policy, and that's going to be good for oil and demand. You're seeing India on fire right now, doing very, very well. So, the major countries are doing well. They need oil. I just, this is one set of this is one sector that's actually going to come out with earnings and maybe raise their earnings or their expectations or be able to provide guidance compared to every other company, which is just a coin flip right now. I don't know what they're going to say for guidance. It's going to be funny. You're going to see if companies are going to be aggressive on the earnings call. If they are, you're better off shorting those companies because this is not a time to be aggressive because the Fed continues to raise rates like they're promising to do. We're going to get a high CPI number. We just got a terrible jobs number in terms of showing that inflation is not really slowing down in the gauges that they look at. Look out. So it will be interesting.